Alright, so now we'll take up the questions. We have the cue cards with us. If you've written your cue cards, that will come to us. Okay, so this question is from Mr. Mukesh Clark.
What kind of technology we can use in our advisory business?
An investor has three essential requirements. One is a transaction requirement, the second one is a protection requirement, and third one is the investment requirement. And mutual fund comes in very well when it comes to seeing what his investment requirements are. So whatever platform you wish to choose, I think you need to find a way to cover all these three requirements of the investor.
Now we have a question from Mr. Raghav Sharma. Yeah, alright. So he's saying, what were the strategies that a successful distributor like Bajaj Capital used in the change scenario? Can you share those successes? So Rajiv?
We are simply trying to do the basic things right. Which is that we are trying to stay in closer touch with the customers, and our focus, is shifting that how many customers are we keeping in touch with, what is the frequency of our interaction with them, and अगर हम client को बार-बार मिलेंगे, regularly मिलेंगे, opportunities arise in interactions. So we paid special attention to this aspect of business, and we've had some very good results.
Now this one is from Rajendra Sahu. He's asking, in a dynamic environment where regulatory changes are so many and quick, what's the training programs you can provide us? Probably Jaideep, you have to take this.
We did a survey with our investors as well as with a large number of distributors. We had a sample size of about 3,000, and one of the things which came out from a distribution perspective was that they wanted to know how they can increase their knowledge so that they can make this transition from distribution to advice. What we did is we tied up with NISN and we launched a program by which a large number of investors went through this 2-day program by which they were taught about the new skills required to move into a full-fledged advisory platform. I think like this, there are supposed to be many programs, and from a UTI mutual fund perspective, we are committed to train, because if the training is good, as I said, the battle is easy, and we'll continue to understand from you wherever the gaps are and add value there.
Okay, we have one more card. It says, what is the future of a financial advisor, especially with the dwindling commission levels?
The future of advice is very bright, despite lower commissions. And the fact of the matter is that in whichever industry, wherever there is demand, if you don't provide the supply, somebody else will come. So the demand in this industry is very high. People want to create wealth, and they will look for an advisor. If not us, if not me, then somebody else, then you. So it is as simple as that. And we have to get, what has happened in last 1 year is we have got used to lower commissions. So we have started focusing on volumes, increasing our product breadth, etc. And now just imagine a situation that you are able to hang in there for another year or two. What will happen is investors will start getting used to paying fees, and that will become another head of income for you. So what will happen is that your business model is designed in a way that you have now, it is 2 years after the regime change, and you have got used to not having a fee structure and just working on lower commissions. You reduce your costs, and suddenly the fee starts flowing in. It suddenly goes straight to the bottom line, and the business starts looking very attractive. So hence, from this pure logical point of view, I would say the future is very bright, because there is huge demand for people who want to create wealth, and they need advisors to help them create wealth.
Right. Now, this question is from Mr. Yashpal Arora. He is saying investors look at equity schemes or mutual funds as an alternative to investing in direct investing in stock markets. This is leading to huge churn. Probably, Udin, you will have to take this. How do we counter this to increase stickiness and long-term investing?
I think one way of telling the guy who you're talking to, maybe you talk to him, you talk about very simple products like index funds or something, and show to them that okay, you don't have to do all this, and this is a very simple product. It's going to mimic. If you stay with me for a larger period of time, a longer period of time, not just 1 or 2 years, you're going to get some results out. I know he probably is not going to buy that, but but then we are talking about this whole paradigm of relationship. That's where you have to be there and keep talking. Instead of the 1 year or 6 months, you're talking about doing it more regularly. You can just show hard facts and stats to show that if you had just invested in this share, it would have gone up, down, sideways, whatever. It would have gone. If you have invested in X share, it's not there. It's got the company's got defunct. Those are the kind of examples, numbers, facts, figures. That probably is the best way of putting the point across. People might still not see it because people are used to, when typically they come for stocks, they will say that, okay, this is a way of getting rich quick, not how do I buy my house. So, it's not just the distributors who have to make the transition, it's also the investors. So it's going to be a long haul, I suppose. But as Mr. Bajaj rightly pointed out, I think seeing it through, being a little patient might be the way out.
Alright, so now we come to the interesting part of our program where we honor some of your colleagues who are here with us present for outperformance, for the regional awards. Now, Mr. Arun Gupta, he's been an advisor to many on pension and investor awareness initiatives. The youngest IFA. We move ahead. Mr. Rajesh Pandey, who's from Allahabad, focus on long-term investing through CCP. Please give him a big hand. Now we move ahead from monthly income schemes. Renu Gupta from Meerut, a veteran of over 50 years in the field of investments. Investment. Okay, so now we'd like to call upon Mr. Ashish Goel. The category is SIPs, and he's from Janakpuri. He has wide customer base and a strong retail business. He is king of SIPs. Retailization of debt products. Mr. Rohan Maurya from Preet Vihar, active in debt products. For investor awareness initiatives, Mr. Paramjit Singh Bedi, need-based seller from New Delhi. For young investors, Satnam Kaur from Amritsar. Mr. Vishal Binch from Ludhiana, large number of retail clients. For retirement, Mr. R.P. Sharma from Chandigarh, focus on advisory.